Yes, my friends, here we are with the Coast to Coast Canadian Real Estate Show with, as you all know, Roland Kim from Vancouver and someone new, a new face to the show, Tisha from Calgary, and missing in a snowstorm. Well, he's not missing. He's just cut up in a snowstorm. Tom Cliffy, he'll be joining us next week. But I want to welcome everybody to the show today. And we are going to be talking about everything Canadian real estate, somewhat locally and, of course, more on the broader picture as well. But here's what I know, my friends. We are all in this together. Roland, how you doing, my friend?
Doing awesome. I feel like spring is here in Vancouver and the market's kind of warmed up and we never really saw any snow. So Cliff, he should package some up and send it to us on the West Coast.
and new to at least a lot of our viewers, Roland, we've got someone pretty special here from Calgary. Tisha, why don't you introduce everybody to yourself?
Well, hi, I'm Tisha McKenna. Yeah, and I am in Calgary. I've been in real estate here for 17 years, and we do have a lot of snow here, so I could certainly send you some.
Yeah.
Spring has not sprung, but our market says different.
Is that right? Is that right? Yeah, we're going to get into, some of the local markets and I love, here's the question. And when people ask me this, I'd love to get your response. The big broad question, and we know we got to dive deep into this. However, when the question of how's the market, well, we're right across Canada, and Roland is talking about the spring market. Tisha's talking about it's cold and it's snowy, yet the market's still moving. Yet we all have specific niches of the market, or like a client asks, "How's the market?" Well, they might be only concerned with 3-bedroom homes in the south part of Calgary as opposed to what's going on the north side, right? Like you gotta ask questions, my friends, right?
Yeah.
Definitely.
Well, certainly in Calgary, it's been a very low inventory market here for some time. And so the demand here is just really strong. We've got under a month's supply here. And we haven't seen those inventory levels since 2006. So extremely tight in all segments of the market here.
Is that right? Yeah, I know in the Toronto area, we're still looking. We're probably hovering around 40 days, a little bit less than that, but probably 40 days of inventory, days on market, excuse me. And what's it look like in the Vancouver area? I know it's a broad question, but just general scopes type thing.
Yeah, so January was really busy, but I mean, comparing it over last year is a little bit of a fallacy because, last year, January was so slow in our market, but we were about 40% busier, but still off, 30, 40, 50% off 2022-21 levels. And February is a little bit interesting. Like it's certainly busier and it will be a busier year for us, but that percentage of increase hasn't continued. Like right now when I'm tracking, I'm thinking maybe a 5% increase over last year and, substantially off 2022-21 numbers. It is definitely a market with a lack of inventory. And I would say the people who are buying today are folks who could have bought, 6 months ago, 5 months ago, but they wanted to make sure that interest rates are stabilizing. And so it is a curious market because on a macro level, I definitely feel like inflation round 2 a little bit is going to be a struggle in the future. Like I don't think we're crushing inflation and bringing it back to 2%. There's too many signs that are telling me inflation is an ongoing challenge and expenses are continuing to stay high. But I think there's just such a demand perspective in our market where people are finding a way. Right now, the people who are buying are finding a way of making it work. And eventually, when we do see a rate decrease by mid-year, there'll be a steady new entries into the real estate market throughout the year to keep us pretty steady. And the people who leave, they're moving to Alberta. I heard we had the highest net immigration, it seems, from Canadians to Alberta.
4.5% of it's massive, the amount of people coming to Alberta. And Calgary's really felt that. And I think that's certainly been part of the demand issue and the inventory staying low is there's just, so many buyers from out of province coming to town.
Right?
Yeah.
Yeah. I'm curious on both, all 3 cities in a sense, obviously, is the inventory levels. Obviously, we're talking about them perhaps being down year over year, and it's it's kind of comparing apples to oranges in some cases. However, the inventory that you're seeing now, and especially in your case, Tisha, where it's really low in a sense, um, are you seeing are you seeing in a sense a surge of new inventory or inventory that perhaps was delayed from last fall coming now in
Yeah.
the early part of this year? I'm curious on that, Tisha.
So we are seeing some inventory hitting the market now that we're getting into that spring market and things are starting to percolate. But because there are so many buyers, those new properties are getting snapped up. So we're still sitting very low on inventory levels. And you were talking about days on market. I was watching those numbers this morning, just kind of had a look at them, and I noticed even this month they're dropping. So last month they were sitting around 30 days on market, and now I see them closer to 25. So even days on market is dropping. So I think we will have more inventory coming on, but it'll probably remain tight. It's just there's just so much demand right now.
Yeah, yeah, and likewise here. Well, I shouldn't say that. The inventory that's showing up today is inventory that got delayed from the fall. Yet,
Right.
um, it's not coming as fast as perhaps we thought it would.
Mhm.
People are still kind of hanging, and we're still in winter, so I want to make sure that people understand that we don't have that spring market or the spring weather that Vancouver is
Yeah.
having there, Roland. Uh, and the entry level pricing I'll call it in pockets or in areas. We're seeing offer dates, we're seeing multiple offers, and then that next step up, it's offers at any time and nothing too crazy from that perspective. Roland, what's your experience there like?
Yeah, we definitely. I think January sold a lot of inventory that had been on the market in the fall and didn't get sold, and we're starting to see a little bit of brand new inventory, but it's still pockets, right? Like I have certain inventory in certain parts of the city that I'm still surprised how the lack of phone calls and attention, and then other entry level or even houses that aren't entry level are getting a lot more attention. And so, area specific, I mean, I think we're going back to that type of a market where the tide that lifted all boats in 2022, 21 is gone, so it's every neighborhood, every category of inventory has a different appetite, it seems. And so it's become a little bit more micro again, where you can't assume that neighboring city went up that you're going to get the same response. It is curious. I always say when both the seller and the buyer are unhappy, it's probably a balanced market. Buyers are saying there's not enough inventory, and I still have sellers that are, surprised that their home hasn't sold. And so it is in many ways, I think, the bottom of this cycle of this market that I see in Vancouver. But where I'm changing my tune a little bit from a couple weeks ago is I think the low will be a lot longer of a sideways market. And I'm not a big believer that interest rates are going to drop the way that people think they are, because I think we have like a beast of an inflationary problem that the Bank of Canada can't adjust too much in the future. And so I think the market's going to get comfortable in interest rates in the mid fours as being like the future good interest rate. And I still think there's a lot of consumers that think it's going to be a 3, in the mid to high threes. I don't see that based on interest rates and the factors out there. I think and that's going to have, like, we're definitely noticing in my market where there are people who naturally thought they would be upsizing from the 3-bedroom townhouse into a family home, and they're now realizing that the numbers aren't going to make sense for them to upsize, and so we're finding ways to live longer in the same property. So I'm seeing a real shift on that front when it's an expensive marketplace.
Mm-hmm. It's interesting, and we were going to have that conversation about interest rates, and you opened the door, so let's have it now. Although we are representing 3 different areas and 3 different markets, and of course, Tom in the East Coast there for our next video. It's real estate's very, as we all know, and we need to make sure our clients, everyone else knows that it's very local and very specific, even community
Yeah.
specific. But you can see where I'm going. The one thing that does tie us all together is, of course, is the interest rate. It's nationwide. It's not based on location or everything like that, and other parameters. We follow what the Bank of Canada and that type of thing does. Interest rates is a hot topic, and depending on what side of Twitter or what side of X you're on, it's the worst thing in the world, or there's opportunity and things like that, and just kind of peeling that onion away. So I'd love for this next couple of minutes, we just kind of peel that onion away of what, and you kind of alluded to it a little bit, Roland, what clients' feelings are, because here's what we know, my friends, is doesn't matter what we say or what we do, in a sense, when it comes to, yeah, here's an opportunity for you as a client to purchase or to sell this home. It's that end user that is really that's the person that gets affected, right? Whether they're buying up or buying down, or their renewals coming up. So what's kind of we'll start here, then we'll get deep. Tisha, what's kind of the sentiment in the Calgary area what's the relationship to interest rates? Maybe that's a fair way to ask that
Yeah,
question.
so it has actually been really interesting because interest rates, when they went up here, we still had a really strong market, but a lot of buyers, instead of looking at that single family detached, started going to the townhouses and the condo market. So it's shifted the pie of resale here, and it brought it a little closer to your areas where more condos and more townhomes were being sold than single family detached. So it's definitely shifted our market a little bit, and our condos and townhomes, who classically weren't making the gains that the single family detached sector are up to like a 13% gain this year. So it hasn't really slowed things. Well, I shouldn't say that. It has slowed things down a little bit, but it's more than ever kind of changed what's happening here in terms of resale, and more of a focus on multifamily.
Oh, is that right? So, okay, let's dig into a little bit about that. Multifamily being properties with obviously with more than one unit, and is that what an end user is looking to purchase because they're needing an income helper, or just a
Well,
broader
actually,
approach from investors?
what I meant to say there was more condo buyers and more
I see. Okay.
townhouse buyers. However, you're not wrong there. I am noticing a trend with people getting together and buying property. So I had a recent sale that had, a front back unit, and two families got together to purchase that. So we are seeing a little bit more of that for affordability, and just trying to make it work.
Yeah, interesting. Roland, you talked about interest rates earlier in the correlation between inflation and what have you, and it's interesting because, not that we want to get into the science behind it, but there's a lot of people, a lot of viewers, in fact, and consumers out there that don't put that correlation together.
Yes.
So,
And
yeah, go ahead. Help us
yeah,
understand that a little bit.
yeah, so I mean, there's there's good and bad to the different mortgage markets if you compare it between the states or us. So if you look in the states, 50% of the mortgages out there are fixed 30-year terms, and so most of those people are locked in at, let's say, sub 2%, around 1.8, and if they were doing something today, they're in the high threes. And so in the states, I think there's less. Like less turnover right now in activity, because unlike Canada, they don't do blended mortgages. In the States, if I have a $500,000 mortgage and I want to buy $1 million house, I don't do a blended mortgage with the bank. It's a whole new mortgage. So there's good and bad. One is they're able to have a long-term, price assurance and stability, but they can't reformulate the mortgage the way we can in Canada. So the nice part about our mortgage system, where we only have terms of, on average, the most popular term is a 5-year mortgage. We are definitely moving into an area where it will be curious, because there's over $90 billion worth of mortgages in the next 3 years coming up for renewal. So I think I have it written here in 2023, it's about 188 billion, and then 2024, 188, in 25, 315, and then over $400 billion worth of mortgage in 26. And so all those folks are coming into currently, if you're refinancing, you are refinancing in a completely different climate and a different rate than what you had. And there is there's still a big expectation that rates will go down 1% this year, maybe 1.5%. And I'm more and more of a believer that that's not going to happen at that rate. Like, we'll see a rate reduction, but I think it could be a lot closer to maybe 0.5% in Canada this year, because the winds of inflation are just pushing steadily. So it will be, what I'm seeing is just like a curious landscape of people again, realizing that their natural upsizing, into the biggest and best home might not be happening. And so I'm having way more strategy conversations with clients than I've ever had, where clients are realizing the numbers may not work for them to get that final townhouse or duplex or detached. And it is curious because previously, when I was working, with someone who was in the market and they're looking for more size, I didn't get into the nitty gritty of the numbers that much because, kind of cavalierly always felt, okay, they have another $200,000-300,000 of borrowing room if we need it, right? And of course, they didn't want to go there, but in the past they could. And we're definitely now seeing a landscape where, the mortgage rates are a real long-term recalibration wherever they land. And a lot of people ran their numbers with interest rates that we'll probably not see again. And so it is interesting, but it's like, in one way, it's good because I don't think we're going to have a runaway market in this recovery cycle. I think it's going to be a real sideways with steady growth, but not like a big takeoff as it normally happens when it's recovering. And in some areas, it's pretty sad because a lot of folks aren't going to be able to get into their best and final home. And so it kind of is a challenge, certainly in a mature and expensive environment that I'm part of, where I'm doing consultations and realizing we can't do what we want to do. And that's certainly the first time in 15 years where, we're running against roadblocks that we don't know how to move.
Yeah. Yeah. Well said. And, hindsight's really easy when you get to look back. Forget 2020. It's even clearer than that. I'm curious from both your perspectives in your markets, and I'll add my input too here in the Toronto market. Are people that purchase today, whether it's the first time, downsizing, right sizing, doesn't matter what you call it, moving homes, are they better positioned? Do you think they will be better positioned today as opposed to someone that buys in 12 months from now? I just want to know what that local opportunity is, Tisha.
Yeah, I think here you are better off getting in the market now, even with the potential rate drop. And of course, we don't know what that's going to look like, but it's not going to be dramatic. And so, with the Calgary Real Estate Board anticipates 6.5% in equity gain overall here, and I think, frankly, it's going to be higher than that with the demand. So, you know, 0.25% is really, maybe 0.5% is not going to make that big of an impact. You're better off just getting that foot in the door and start paying down that mortgage.
Yeah. Yeah. Roland, love to get your thoughts on that.
Yeah, same thing. I think if you're able to make it work right now, it's better than waiting. There's certainly, the challenge is there's certainly clients that I'm working with that need, a rate reduction of 1% to be able to make the numbers work. And hopefully that happens for them, but it's not assured the way I felt, it was going to happen 3 months ago. And so definitely if you are able to purchase and you can find the right, equation that can work for you, earlier is better. Being aware that, the big difference is not so much the market running on people. I believe it's more, a lot of people will realize they can't do what they wanted to do, which will cause and continue to cause a lack of inventory coming into the market. Like most of the people that are upsizing own the properties that other people are looking for, right? It's the people that are leaving from older detached homes to, after, like aging in place, their inventory is less and less the desirable pressure point of the market. The pressure point of the market is 3-bedroom, townhouses and duplexes, and then really special 2 bedrooms for the people that can't afford the 3-bedroom. And that middle tier inventory is entirely tied to the people being able to upsize or downsize or move cities. And if they can't, that inventory is not going to hit the market, right? So I think we're steady, and it's going to be another solid year of growth. But it is curious. Again, the conversations that folks are having are at levels that we previously didn't go into the minutia of it. And
Yeah.
now you really have to know your numbers and figure out, can you enter and when's the right time to enter.
Yeah. 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 And it's that, that balance too, is interest rates are here and maybe values are here, but as interest rates comes down, we know what that does to value. So
Yes.
we gotta,
Yeah.
you gotta watch that carefully. And that's why you gotta be, you gotta work with a great realtor that understands that and provides that opportunity. The interesting thing here in the Toronto area is we had the lowest number of sales since year 2000, which is nuts. And we're looking at a 15% jump in sales,
Yeah.
which sounds like a lot. However, my friends, it's actually not. Even if we hit that 15%, it'll still be on the lower scale of sales per year. So we've got a lot of opportunity. And of course, typically when you get more sales, values do rise up. And I don't think we're going to see crazy rises, but we'll see our typical 5% without a doubt. Maybe a little bit more on the bottom line or the
Yeah.
lower end of properties, like where you guys are seeing. That's what people need to be aware of, that we're going to see more transactions. And just to your point too, Roland, the 3-bedroom homeowners, they're kind of clogging up the system right now, meaning we need those homes to come onto the market so everything can start moving, right? I don't know. Is that similar to where you are, Tisha, in Calgary?
Yeah, we're definitely seeing that part of the market being very, very high demand. Um, you know, townhomes in the south, I notice, have just had a dramatic jump. There's just a ton of demand. And yeah, that's where the sweet spot is, where people can afford it. So of course, everybody's looking to buy at that price point, and so many competing offers in Calgary on those kind of properties.
Right. And I'm
We
curious,
are,
let's get it. Yeah, I'd love to get into that just a little bit so people are aware of what a competing offer looks like. Are we talking about competing offers with zero contingencies or conditions, or like do they have to go in firm, or you're still looking to, and you get that in home inspection financing, that type of thing?
yeah, there's still conditions a lot of the time. There's of course quite a few that are going unconditional and trying to lock that up,
Yeah.
and then there's those offers that are, people know how to write a strong offer nowadays in Calgary. We've had some years where that was, we were not in a seller's market, and so the tables have really turned here in recent years, and I think as Calgarians, we're so used to having a cyclical market. So it's almost like we're waiting for the other shoe to drop, and we're having to kind of realize, well, this is what, a big seller's market looks like. And we're going to have to write strong offers now and go in over asking, which is not what we're used to a few years back.
Yeah. I often think, and Roland, you may disagree with me on this, but I'm gonna throw you under the bus with me on this. Uh, the, from my experience and being an investor for the last 15, 20 years, the Calgary market or the Alberta market goes through the real estate cycle or that financial cycle much faster than, say, Vancouver or Toronto does. We're very slow moving around that cycle. So you may have a better experience and you may be better prepared for when the market is moving, as opposed to where, say, we are in Toronto, Vancouver. Your thoughts on that, Roland?
Yeah, I think that's like two topics that have kind of come up that I want to talk about next week is I think one, you said nationally the interest rate affects us all, and the other one that we can lean into next week is how population immigration affects us all. And so I actually believe Alberta is going to move away from that cyclical wave action market to a more traditional, what we've seen in Toronto and Vancouver. Where it's stabilized simply by people moving and the jobs are transferable, right? And so I think it's going to disconnect from having the upcycle based on commodities, and the upcycle is building now based on migration. And so that's a very curious one because it affects us all. And then the other item I want to dig into a little bit next week maybe is about pre-sales. It's funny because right now I talked to a few clients and I'd say pre-sales in the Vancouver area are, they're moving more slowly, and the developer is more open to doing adjustments on the deposit system and some adjustments, which leans you into thinking that like somehow that market is going to soften a lot further. And it's actually a curious thing that I think it's going to recoil And right now is probably one of the better times to buy pre-sale, because the inventory that is slowed down and not hitting the market is no one's really realizing that the developers, have stopped putting inventory into the market if they can't sell it. And eventually the flip happens very quickly where it gets attention again because there is no inventory and people move to the pre-sale. And so there's, again, it's the pre-sale market in Vancouver, I think if you're looking for an investment is a good area. And yet it's, it's at the low point where I think people will see on hindsight that, you could have stepped in. So many things to talk about in the weeks ahead. And I'm really excited to have Tisha with the Alberta market, because if I could relocate anywhere to be a realtor, I would relocate to Alberta and start my real estate career there, because I think they got such an exciting decade ahead of like, steady market where they're going to see the impacts of Canadians moving to a more perceived, value for your dollar market. So it's an interesting time for that province.
Yeah, we're certainly excited about it here too.
Good. You should be. You should be. And I'll hold it. I'll say this comment, but I'll hold the details of it until next week. But we are seeing more and more people migrate within Canada than we've ever seen before for different opportunities and different things. And it provides, a unique scenarios for, local businesses and of course, realtors and things like that. And this is another one of those reasons why we wanted to host this coast to coast real estate update or show, is the fact that you may think of your realtor as just Vancouver or Calgary or Toronto realtor or our friend Tom in the East Coast, where we network with great people right across the country. And there's often times where I'll pick up the phone even to Roland and say, hey, I need someone here or there. Yep, I got that person because I've done business with them, I've vetted them, their personal friend or what have you. And if you're a buyer or seller out there, you want to get connected to someone that has already been vetted and everything like that. Tisha, tell us how to get a hold of you. What's the best way to get a hold of you?
Well, you can call me or email me at 403-869-9730 or ask Tisha at kw.com.
Excellent. Roland?
Just Google Roland Kim, KYM is the last name, and you'll get my phone number and contact details on lots of different platforms.
There you have it, my friends. And if you want to get a hold of me, go to it. Visit the website on the hat. There you have it, my friends. So until next week, we'll see everybody then, and have a great week. Bye for now.
Bye for now,
Bye.
guys.